Hey guys, welcome back to another episode. Today we're going to take a quick look at 3 fintech companies that I think are looking pretty interesting right now. I do want to start off right just with mentality of the stock market right now. It's pretty scary, right? And especially if you kind of just started investing, you might want to just give up and never invest ever again. And I do want to say it's probably the worst thing that could happen. And I do want to say, remember when investing, it is kind of that long-term mentality. And the market is really good at making you feel like idiot in the short term of things, but is really great at kind of making you seem like a genius in the long term of things, right? So that long term mentality does help out. And something I'm doing, I am continuing to be a net buyer, even though stock prices continue to go down. I do my weekly investments, continue to buy stocks. And yes, maybe in the short term of things might look bad, and short terms can last some things between a few months to even a year, maybe even more than that. But the money I'm putting to work right now is money I don't expect anytime soon, 5+ years, maybe even 10 years. So for me, this money might look down right now, but I believe in the long terms of the companies I invest in, and I believe the money will be a lot more in 5 to 10 years. And that's all that really matters. So I just wanted to share my overall mentality of what's happening with the stock market, especially when we take a quick look at the 3 stocks I'm looking at, right? So Coinbase right now, today is down about 4%. Square is the other one, it's down almost 6%. And PayPal is the only one that's actually up 2.4%, but this one has taken quite a beating. And before we go any further, if this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for free Discord, free newsletter, and a lot of great investing links. So again, let's take a quick look at price action on these stocks from all-time highs. We have right now Block, which is down over 63%. We have PayPal, which is also down over 63% from all-time highs. And then we have Coinbase, which is down over 53%, right? So especially for new investors or for any investor, sometimes we do that dollar cost averaging mentality, right? So it might have sucked to purchase stocks at the high and then go back to original, right? Kind of sucks to purchase stocks at the highs. But if you have that dollar cost averaging or kind of put money to work on a weekly basis, that average price, the price turns to average out at a great value. So something to keep in mind, especially if you are a net buyer, but not just on stock prices, right? I don't think we should get kind of anchored in stock prices because it might take some time before we see all-time highs. It could take months, it could take years. The way the market works, it could be either or. But let's take a quick look at more fundamentals for all these companies. So first, I wanted to take a quick look at gross profit trailing 12 months. And we can see for all 3 players, they all are growing their gross profit in the trailing 12 months, and they are profitable when we take a quick look at that metric. The other thing I wanted to take a quick look at is their balance sheet, right? Balance sheets are very important, especially during times where it talks of high inflation, of high interest rates, and all and that sort of issues, right? So we can see Block right now, positive in cash flow from operations, more cash than debt. So fundamentally, Block, aka Square, looks great for me. If we take a look at PayPal, PayPal has huge cash flow from operations. They have a little bit more cash than debt again, but remember, super profitable in cash flow from operations. So fundamentally, also looking pretty good. Coinbase, similar, right? High cash flow from operations, high cash, less debt than both of them. So fundamentally, all 3 look pretty interesting to me.
Let's take a listen to today's sponsor. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services The Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the Stock Advisor is right for you. Thanks again to the Motley Fool, and now onto today's video.
All right, so now that we took a quick overview at the fundamentals and price action of these stocks, I want to talk a little bit more about kind of their growth potentials. And I'm more of a growth style investor where I enjoy obviously strong fundamental companies, but I like to see them fundamentally having some form of growth strategy. And I believe PayPal is in that mentality right now. So PayPal has transformed their application, right? They have added buy now, pay later. Even though I'm not a huge fan of buy now, pay later, it does seem like it does bring new users to their platforms. They've also added a nice amount of crypto solutions for them, touch-free payments, for example, and the digital wallets with PayPal and Venmo that they have. If we take a quick look at their most recent earnings, they just finished their fiscal year of 2021, and we can see net new accounts, even though it's not the same growth as we saw in 2020. And obviously 2020 was during COVID timeframe where a lot of people were moving to digital wallets, where a lot of people were kind of moving to e-commerce and online payments. The growth is not the same as 2020, but it is still growing it's still growing, right? I mean, look, fiscal year of 2021, they added numerous net new accounts, over 48.9 million new accounts. Total payment volume has increased dramatically, over 31%. Net revenues has increased over 17%. Unfortunately, the company on a GAAP basis has seen a decrease in earnings per share, but non-GAAP is up. Operating cash flow is up, free cash flow is up. And this is a stock that, in my opinion, has been beaten up too much. That's why days like today, where the stock, where most of the stock market is actually down, PayPal is actually up. And I do believe it's been overbeaten. Some other things we can see. Like I mentioned, this is kind of transforming their stuff with more point of sales like Zetto in the United States, increasing their overall digital wallets for both PayPal and then Venmo on its own, right? The other thing I do want to mention, if we can take a quick look, total payment volume, it's up quarter over quarter. It's also up year over year. So overall, the company, in my opinion, is looking great at the moment, especially with stock prices right now. Next, the second one we're going to take a quick look at is Coinbase. Like I mentioned, it's down big today. Market has been pretty crazy. Coinbase, definitely a leader, I want to say, in the crypto market. A lot of people don't like Coinbase, in my opinion, because they believe it's just a trading platform. Yes, that's really mainly make most of the revenue. But again, I like to see companies that have some form of innovative growth in the future. Coinbase is also focusing on providing a lot of blockchain solutions through to the developers and the engineers that are working in that platform, right? So obviously most revenue is right now coming from the trading assets, but I do believe this could be a company in the future to be a huge solution as companies try to get into the blockchain world, right? If we take a quick look, they kind of show their financial metrics. Monthly transaction users for 2021, huge growth compared to 2020. Net revenue, huge gain. Net income, positive in net income, positive in adjusted EBITDA, right? So overall, fundamentally, this is a company that's pretty strong. Obviously, a company that was highly valued, down over 52% from its all-time highs. So that valuation risk has kind of taken quite a hit. For the full year of 2022, Coinbase, like I mentioned, are very dependent on crypto transaction. So depending on how the market works, it's one that can fluctuate and be really bad or really good. And unfortunately, we wouldn't know too much unless the year is done. But like I mentioned, even though trading assets is one of the most important metrics right now, I do believe in the future this has the potential of being a solution, more of like a toolbox. And that's where I like investing in toolboxes where a company pays Coinbase for some form of subscription that they use to kind of develop other forms of applications within the blockchain industry. The third stock we're going to take a quick look at is Block, formerly known as Square. And I'm probably going to get it mixed up. I prefer Square better. The stock price is down over 4% as I am recording, over 6% as I am recording, sitting at $95, right? This is one that's down over 62%. So, I mean, again, all these stocks fundamentally don't look horrible. Gross profit, we can see, grew 47% year over year in this most recent quarter. There is not much growth quarter to quarter, and that might be kind of scaring investors, but I believe there's huge, again, optionality for this company, especially when it comes to international growth. We can see Cash App gross profit up 37% year over year, but pretty much flat. Square gross profit, which is their seller ecosystem, is actually up year over year and quarter over quarter. So two main markets that I believe either both the digital wallet and the Cash App ecosystem and the seller ecosystem are two that I believe can grow dramatically. Remember, I enjoy the toolbox mentality. Square has created a toolbox for sellers, which is really, really good. Like I mentioned, I do believe one huge market that this company can really grow from is the international market. Right now, gross profit in market outside the United States represents only 9% of total Square's gross profit. So this is a company that's continuing to expand into numerous international regions. So I do believe those gross profits will continue to grow, especially as time progresses. We're kind of still in that digitalization transformation market. Other things that I want to mention is the overall Square gross payment volume by seller size. We can see they're growing dramatically by sellers who sell over $500,000 in annualized gross payment volume. So right now it's showing me that Square Block is definitely a strong player in this market. It's not expected to go anywhere anytime soon. Even though in the top end it looks like slowdown is there, that Square gross profit continues to grow. So for me, I'm really excited for all three companies. All three are in my portfolio, and from time to time I will be adding with these kind of sales, in my opinion. Again, maybe in the short term they might be looking a bit high, but in the long term of things, I do believe all three companies have a huge percentage chance of providing me with better results. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.